Hi guys, in this video what we're going to be doing is we're going to be looking at all the separate features of the DayTraderOne and how you can combine them together to really get some high probability trades indeed. So what we're going to do is I'm going to talk you through this chart and I'm going to be telling you exactly what you should be doing and where you should be doing it. So we'll start over at the far left here. We were in a nice sell trade there. We've got red dots, we've got red candles, but that comes to an end. The trend map goes dark red, saying that the trend's coming to an end, and we start getting blue candles. Now we're not going to buy straight away. The heat map does turn blue. We do have blue candles, but we want to wait for these dots to go blue as well. So that's our added confirmation to really make sure we only take the highest probability trades possible. So what I'm going to do is I'm just going to enter this trade now. So as soon as my dots go blue, I'm going to enter it, and all I'm going to do is keep trading my stop up. Now if my stop gets hit as I'm trading it, well then I'm really happy with that. I'll make some good money trading it, and I know if I do get unlucky and I do get stopped, then I've used a very high probability system, so I won't be too worried. I won't beat myself up. I know I've taken a really good way to exit the trade. So as we trade our stop up here, we'll be in this trade, and what we're going to do is put our stop and trade it up to the previous level support and resistance. So we're at this candle here, and that says support's down there, so that's going to be our stop there. And likewise this candle here, well, we're going to put our stop at previous support and resistance. So that says support's there, well we're going to put our previous support, which is there. Likewise here, let's have a look at this candle here, for example. Send the support there, so we're going to put our stop there. The reason for this is because we naturally expect price to test our support and resistance zone. So if we put our stops directly on support or resistance, then as price tests it, it may stop us out. So we put it that little bit further away to give our trader that added room to breathe. So all I do is I keep trading my stop up there, and eventually I'll get stopped out up here. When the price starts to retrace here, again my stop's at the previous level of support, which is here. So price is going to take my stop out there, but not to worry. Made quite a big move, that one, so I wouldn't be worried at all. As I say, when we get stopped out like this, I know I've used a very high probability system, so I'm not going to be too worried about getting stopped out. But I would have been stopped out there for quite a bit of profit indeed. And now we go red there. The trend map goes red, is telling us that we might want to look to take this trade short, and we've got red bars there. So I'm going to be looking for a short trade, but I've still got blue dots, so I'm not going to be taking the trade just yet. I'm going to take it here when my dots go red and my bars match, and that's when I'm going to enter this sell trade. So enter it here, and again same rules as before. I'm just going to keep trading my stop. So when we're at this candle here, well, my previous resistance is there, so that's going to be my stop. Likewise here, when price tries to retrace a bit there, well, my stop's going to be there. So I'm never in any danger at all of getting stopped out. Even here, the market does retrace quite a bit, and if we put our stop directly on resistance there, then it wouldn't have worked out so well, and we would have been stopped out. But as I say, our stop's going to be at the previous area of resistance, so it's going to be here. So our stop is well safe there, and there's no danger of getting stopped out at all. And eventually we will get stopped out though, and that will be this point here again, previous resistance. So we would have been stopped out, but again would have been stopped out for a very big profit indeed. So absolutely nothing to worry about. And again, the market changes again. We've got blue bars here, a blue trend map, so we want to be looking at buying this market. So where do we buy the market? Well, we just wait for our dots to go blue. Now, we go sideways for a little bit, but again, our stop's always safe. Our stop is here, previous support, so we're never in any danger at all of getting stopped out. And eventually we trail the stop again. Again, right here, price has tested our support zone there, and if we had a stop right on support, we would have been stopped out, but we don't do that. We put our stop right here, previous support. So again, plenty of room to breathe, and like we expect, the market does go long. It's just a matter of waiting. And this trade is still running right now. So if anyone took this trade using DayTraderOne, then you're still in it for an awful lot of profit indeed. And price will probably keep running and running and running. The trend map says the trade's going to run. The bars do, the dots do. So this is really good trades indeed. And this is off the Australian dollar, and I hope you can see that this is the DayTraderOne really does all the hard work for you. It deals with your entry, your stops, your exits, everything. So I hope that's clear now, guys, and you know how to trade the DayTraderOne. As always, if you've got any questions, then just follow up with us. Send us an email at support@theindicatorguys.com, and we'll get back to you and help you. But I hope this video makes it clear to you exactly how you should be trading the DayTraderOne, and where you should move your stop throughs and where you should enter, and things like that. So as I say, any questions you got, then just send us an email. But I hope this video helps.